Hey everyone, welcome back. So glad you could join us for another deep dive.
Always happy to be here.
Today we're tackling something you guys have been really curious about. Those tariffs that President Trump imposed. And you know what? You sent in some really fascinating articles about how all of this might be shaking things up in the market.
It's definitely a hot topic.
It is. And it looks like you're all trying to figure out how to navigate this whole thing and what it means for, well, your money. And I get it. Some sectors, they could take a hit, right?
Right.
But some, it seems, could actually benefit. So we're not talking about your typical doom and gloom economic news.
Not exactly. Well, it's more nuanced than that.
Okay, so let's break it down. First off, these tariffs, they didn't exactly make a big splash, but like a good splash globally. We saw some stock market dips, currencies like, what was it, Mexican peso,
Yeah.
and the Canadian dollar. They got a little shaky.
Yeah.
And then you had both China and Canada basically saying, oh yeah, well, here are some tariffs right back at you.
And that reaction right there, that's what should make any investor really think twice. Because what it's really telling us is we could be like on the edge of, a full-blown trade war.
Right.
And that has some serious implications for, stability, global economic stability.
Mm.
And I think, you can think about it like a ripple, right? Like
Yeah.
instability somewhere else and make things uncertain here, which can then, directly hit your investments.
Okay, so then how do you prepare for that as an investor? I mean, the articles that we've been looking at, they all kind of point to this like defensive strategy.
Yeah. You got to think defensively here. So that means shifting your focus, to sectors that aren't quite as vulnerable to, let's say, the ups and downs, the whims of trade
Yeah.
wars, like healthcare, for
Yeah,
instance.
healthcare. That's consistently highlighted as like a strong sector.
Yeah.
And a lot of that, this comes up in the sources too, is because of the aging U.S. population.
Yeah.
But I guess I'm wondering, is there more to it than just that? Like, why wouldn't healthcare be as affected by trade wars as something like, I don't know, tech or manufacturing?
Well, it really comes down to, I think, demand. Healthcare. It's a necessity, right? It's not a luxury.
Hmm.
And most of that demand, it's domestic. Plus, you've got a really heavily regulated industry, so it's kind of shielded from those global market, what do you call them, fluctuations. The articles even suggest looking at some specific companies. Merck,
Yeah.
Gilead, CVS, Health, Amgen, Stryker.
A lot of big names in there.
Yeah, but of course, standard disclaimer. Always do your own research before you go making any investment decisions.
For sure. So I'm hearing this is about understanding like what makes a sector resilient, right?
Yeah.
But it's not all about just individual companies, is it? I mean, diversification, that seems to be a big theme in everything in all the articles you sent.
Diversification is huge.
Now-
Absolutely. Spreading the risk, it's critical, especially when things are uncertain. And so for that, the sources, they're suggesting considering some tangible assets, gold, for instance, high-quality bonds.
Okay, so they call these things like safe havens.
Right.
Right. But what makes them so, like, quote unquote, safe during, economic turmoil?
Well, they tend to hold their value better when, when things get a little shaky. Gold, for example, it's a finite resource, right? I mean, there's only so much of it. And historically, it's been viewed as like a store of value. Bonds, particularly high-quality bonds, they offer a steady stream of income. So during times of uncertainty, you see, people, they flock to these assets because they're perceived as, less risky.
Okay, so that's a solid defensive approach.
Yeah.
But, I got to say, the Business Insider article, that one kind of threw me for a loop because it seems like some industries, they might actually come out on top, benefit in this whole tariff situation.
Yeah, there are definitely going to be winners and losers. And it's not all, like I said, doom and gloom. You're right. Certain sectors could actually see a boost, like domestic manufacturing, especially steel production. You think about it. With fewer, cheaper imports, demand for American-made steel, it could really surge.
Interesting. So if some benefit, others, well, I guess the flip side of that is that industries like IT hardware, automotive, consumer goods, that kind of stuff, those could be in for, well, a rough ride.
Exactly. So, if your portfolio is heavily invested in those sectors, it might be time to, take a step back and reassess your strategy. Think about what these tariffs mean for their supply chains, production costs, and ultimately their bottom line.
Okay, so we've talked about winners and losers, defensive strategies, but then there's this word keeps popping up, stagflation, kind of a scary word,
Yeah.
but I'm not sure I really get what it means like for the average investor.
So stagflation, it's basically when you have stagnant economic growth, right?
Yeah.
But then at the same time, you have rising inflation. So it's like a double whammy. it hits your purchasing power hard. Because your money, it just doesn't go as far, and then your investments, they're not growing at a rate that can keep up with the inflation.
So let me see if I get this. If my investments are growing at, let's say, 2%, but inflation is running at 4%, I'm actually losing money.
Yeah, essentially, yes. Your purchasing power, it's being eroded. So that's why understanding this whole risk of stagflation, especially in a tariff environment, super important.
Wow. Lot to think about.
Yeah.
So let me throw it back to you. All of this, tariffs, trade wars, stagflation, what does this mean for you, for your own portfolio? Are you shifting your strategy at all? And do any of these sectors, the ones that we've talked about, do any of them kind of stand out as particularly, I don't know, appealing or maybe even concerning to you?
Well, I think the main thing is, just be really vigilant, stay informed. The tariffs, they've definitely, they've made things more complex, but they've also created some really interesting opportunities. It's all about understanding those underlying dynamics, and then you adjust your approach accordingly.
Yeah. I'm with you there. I think this deep dive has been really eye-opening, especially just learning about how tariffs, they can impact different sectors and sometimes in ways you don't expect.
And remember, knowledge, that's your best defense here. Take the time, to research the companies and sectors that we've talked about today. See if they fit your investment goals, your risk tolerance, that kind of thing.
Couldn't have said it better myself.
You know?
Stay curious, everyone, and please keep those questions coming.
Absolutely. Keep them coming.